Good day, folks. So today we're going to be talking about the market maker model. For short, the market maker buy model and the market maker sell model. So moving down to the illustrations below us, here is the first and classic market maker buy model to sell model program here. The buy model starts with the original consolidation, then reaccumulation, then hit your higher time frame PDRE. You got your smart money reversal. So what actually confirms your smart money reversal? That's your SMRO. What confirms this? You got a lot of things that confirms this, but one is actually your CSD, which is your change in state of delivery. That will be your order block here. Moving from a buy program to a sell program. So your order block above this key level, above this high, can actually confirm your smart money reversal. And you can also take your low risk sell here, or you can wait for redistribution here, or you take your last total soup, which your kiss of death total soup, targeting where these equal highs below your original consolidation. So that's just it. So this is actually the first diagram on the market maker sell model. So going lower, this is the combining with CRT, combining the market maker buy/sell model with CRT. So here you can see your classic 3 candle pattern. Candle 1, 2, and 3. Then here, this gray shaded area, this is candle 1. Candle 2, your manipulation candle, sweeping your CRT low. Then candle 3, you can offer an OT retracement, and towards the end point, you can also receive a kiss of death to the soup towards your original consolidation, which is this gray area here. So using this alone, it's not actually advisable. You need to actually use market maker model, combining it with the order flow. Your order flow, what's your order flow? Bearish or bullish? Your order flow, what's your drawn liquidity? Where is the market coming from? And where is it heading to? That's your premium and your discount levels. Then what's the time? when I talk about time, I don't just mean just one. Combining your time of the month, time of the year, time of the day, then special time segments of the day. We haven't actually talked about all those, but we'll come to that. And the narrative. Combining all these together gives you a high probability trade setup. And also, what's the market profile? What's the weekly profile? So don't say basically you just see a random consolidation here, then you see something like this. Okay, let me take it to this high. I entered here at the touch of this breaker block. Let me take it to this high, and maybe the order flow is actually bearish, and this actually going higher is just maybe an OT retracement to go lower, and you entering here below this low and maybe looking for this high, you won't actually get your target because you ignored the order flow, and which is not actually good. So always combine everything together. Don't use just pattern trade stuff randomly. So here, going here. So on the sell side of the curve, which is actually this is the sell side of the curve. On the sell side of the curve, your bearish PDRs, I've talked about PDRs, your bearish shadow block, breaker block, bearish mitigation block, bearish rejection block, and all of that. Your old highs pop above your old high, then turtle soup, all will be respected on the sell side of the curve. Then your bullish PDRA, maybe your bullish order block, will be disrespected until we get to our draw on liquidity, then tapping on our key level, then we get a smart money reversal, then changing from a sell program to a buy program. So at the buy side of the curve, you look for your bullish PDRAs to be respected and your bearish PDRAs to be disrespected. Because here, going higher, we can target this original consolidation as our draw on liquidity, because this is basically smooth edges and the market will want to actually come and attack these highs over here. So that's that for the illustrations. Let's move on to the live charts. So I'll be using USD card for this example. So let's mark the time of the month together. This is the daily time frame on USD cards. So here, this is March, this is February, so this is March, the starting of March, and this is Tuesday, Wednesday, Thursday, Friday, and here this is week 1, and second week, week 2, 3, and week 4. So marking week 1, 2, 3, 4. So here we got our key level here. Key level tapped on the opening of week 4 here. Let me make this another color, yeah. And we actually swept week 1's low here with this move lower. So key level tapped, and we are at the discount region of this range. As you can see here, we are below the 0.5 level. This is your discount and this is your premium. You buy at a discount and you sell at a premium. So here, turtle soup, taking week 1's low, tapping on the daily key level. So let's see what our auto time frame has for us. So this orange line is actually our key level, and your total soup of your range low. So if you look clearly here, you got your original consolidation over here, that gray shaded area. So Q4, sorry, let me take this out. This is the range. Week 4 actually opened with this move, then went lower, tapping on the key level, taking week 1's low over here. So time of the day, correct. So let's see what actually happens. And closed above this candle high, and you got retracement into this other block, which is your change in state of delivery from your sell program, because this is your sell side of the curve, and moving on to a buy program over here. So the order flow changed from sell to a buy program. So where will be our likely draw on liquidity? So you can actually target your original consolidation high, which is this, or you can target week 3's high, which is this. So let's say this. So you can see how the delivery changed from this after tapping on the key level with this candle over here, then closing above this last bearish candle, which actually swept liquidity over here. The last bearish candle that swept liquidity here, closing above, bullishness unlocked, then a retracement into this bullish order block confirms your change in state of delivery from the sell program to a buy program. And on the daily time frame, you can see that wick below back into the range equals higher prices. So here, close above, higher prices, close above, higher prices, close above, higher prices. So daily bias is bullish. Your order flow, bullish. And your discount and premium, for now, we are the discount buying the low of the discounts, and we are bullish in all sides leads here. So let's see what actually happens. And we expanded towards our draw on liquidity with this move here. So if you're actually targeting this, you could have taken off here with this move. So let's say you actually targeted this and you exited here. Remember I told you guys, draw on liquidity, previous draw on liquidities can also be used as a key level. But for this case here, our final draw on liquidity, which is your previous week high. This is week 3. Week 3. Let me label it. This is 1, 2, 3, and 4. So our previous week high, which is week 3, was our final draw on liquidity. So here, let me say you didn't actually catch all this turtle soup below this low and order block retracement and price expanded, and so this high was taken out. This was our first draw on liquidity. Drawing this out, you can see how price found support within this high over here and pushed price higher. So going to the lower time frame, over here, here, okay. So here was the close and Asian session began, and this was London / opening price here, and a manipulation sweeping this low, tapping on our key level. So let me just go lower. Tapping on our key level, and you got your London session secret model, and buying below the opening price. This is the opening price, here, your true day open. So buying low below the opening price, tapping on our key level, our draw on liquidity is the higher here. So this is the final opportunity, the kiss of death before completing your draw on liquidity. So let's see what actually happens on the higher time frame. So after taking our major draw on liquidity, price reversed, closing below this low. So what actually caused price to reverse? You can see why it's actually good to look at the higher time frame. So remember earlier I told you you sell at a premium and you buy at a discount. So here we got another block over here, which is this last bearish candle. And here, let me highlight this and make this a bit bold. So this is the order block. And I actually told you guys that the midpoint of another block it's very, very sensitive. So price took this previous week high liquidity pool, tapping on the midpoint of this daily order block, wicking above here, wicking above and closing back into the range equals lower prices. So here we can now go to the lower time frame and this becomes the next move. So market maker buy model completed after taking this high over here. This was the buy model and this was the original consolidation. So market maker buy model completed, then tapping on our key level, a new smart money reversal occurs because the order flow is basically bearish because we are popping above highs and breaking below lows. Same thing here, popping above highs, breaking below lows. Same goes here, popping above highs, breaking below lows. So on the higher time frame, the order flow was bearish. So this whole move higher was just to actually take out this week 3 liquidity pool. So we can position ourselves for shorts here, or you can wait for your change in state of delivery to confirming your smart money reversal. So let's see what actually happens. And this is your order block here, which confirms your smart money reversal. Let me just put this as our midpoint of our order block here, not to make the chart messy. So here we tap on this order block and crashed lower. So for this sell side of the curve here will be your target. It will be this lows here. Might be this low, or this low, because these whole areas you got low resistance liquidity runs and all of that, and you can as well say this is your original consolidation and all of that. Yeah, so you can target this for 1, and this low 2nd, and this 3rd. So let's see what actually happens. We tapped on this order block neatly with this move here and rebalance it, this imbalance here. That's the FVG. And let's go to the lower time frame. Okay, taking this high here, offering more sell opportunities to ride everything down lower. And this was news manipulation, by the way. Manipulation into our key level. So target 1, 2, and 3. So that was how you actually use your market maker model, be it the market maker sell model or the market maker buy model. So you can see here, let me note something real quick. Here, CRTI close below, back into the range. CRT low taken by this third candle, open high low close, buy above the opening price. Sell above the opening price, sorry. and this is the opening price of this candle. And we got a range, then manipulation, sweeping this high, tapping on key level, then declines lower, taking all three liquidity pool at once. So that's that for the market maker model. Thank you.